but that's okay. Great. Mm. Mm-hmm. Mm-hmm. Mm. That's mm. Okay. Well, it makes sense that it wouldn't accept it then. But we'll go with the positive on that one. You understand why it wouldn't accept it. Mm. Okay, well, one more last attempt at half glass full is at least it's not daylight savings. Could be worse. It could be adding an hour or losing an hour at the same time. Okay. All right. I'm still waiting for everything that I thought was going to come together to finish coming together, and we'll just have to wait and see. This was my pullback number here. We came within a couple of ticks of that. This is the new target number down here. I'd like to see it pull back to get the green line away from the cycle a little bit. If it pulled back a little bit deeper up to this number, then the green line would pull back just a little bit, and then we get another trade setup going down to this number. The crude, as I said, it had a lot of pullback numbers here, and if it comes together, it's going to be an ugly trade because you're going to have to put the trade on up here. It'll be a momentum trade. It may not even come together. So there you go. You can take it back anytime you want. All right. Well, I mean, yeah, you get everything straightened out over there, and we'll just wait and see how these trades come together. Because right now, we didn't pull back as deep as I thought we were going to here. We were, what, a tick, 2 ticks away from as deep as I thought we were going to pull back here on the gold. And now it's looking like it might make a push down. All right, this is what the trend line would look like right now, the way things stand. So if it continued down without pulling the rest of the way back, you'd go from 65.8 down to 65.4. And the down close there at 65.4 would be a momentum short. Okay, and it should get from 65.4, it should go out. It should go right down to where'd my DOM go? It should go right down to there it is. Let me do this. 65.0 if it's going to. And I'm looking for a reason for it to go further, and I don't see one yet. But as things move down, something else may open up because there's more of a reason for it to drop. But as things stand right now, I'm sticking with the numbers that I gave so far, and we'll just have to wait and see what the market gives. Okay. And nobody's got questions about this, really.
All right, buddy. I'll go ahead and grab it and
Okay.
get
All
through
right.
this. I've never seen a computer not roll over at midnight.
Yeah, that's questionable. Okay. Jason, yeah, the zones are for the Z contract. Actually, it was just in text that it was for the X contract. They're actually for the Z contract. Right? That's a fair question.
I changed everything last night to Z.
Yeah, I know. That's what, there was one thing, the email that went out with the weekly zones in it still said X on it.
Oh, I forgot to change that one.
Yeah.
Sorry,
That's okay.
guys.
I think we got it. I think we got it straightened
I
out.
fixed it in Telegram. I fixed it in the
I know.
concierge trade alerts.
I know.
in Telegram.
It's okay. It's all good. I mean, most people are in Telegram now anyway, but that's a fair question, Jason. And there's a zone there. The zone is at 81.65. So that's probably, I don't, that's not why I'm suggesting it's going to go down to 65. This is gold anyway. You were talking about crude, 81.65. That could be why there's a little bit of consolidation here. Now we hit both of these numbers on the pullback, but the ugly trade that I was talking about is going to be the close on or above this trend line right here. If we get that close on or above the trend line, you see how the black step line just curled right here, right above the BBC? The green line's all the way up into the cycle. The cycle's going down, but it's not too steep. That was the ugliness that I was talking about. If this came together. So I wouldn't do a trade right here on the crude. And the gold gave the down close here. Excuse me, exactly as I thought it. Well, I say exactly. I was hoping it was going to pull back. But given that it was doing a down close, look for it to drop down here to 65. And really, 65 is a big number. It might go through it just a little bit. But the green line is all the way down through the cycle now. So just getting down to 65 is going to be the big push right at the end. Okay. All right. There.
All right, you want me to grab it?
Yeah, you can grab it now. Here you go.
All right.
See your charts. Excellent.
Okay, guys. Guess we'll start with Logic 247. Logic 247. That's our 24/7 round-the-clock Emini alert service. It includes crude, gold, and silver. Since the markets opened last night at 6 p.m. Eastern, we issued a total of 8 alerts. 3 never triggered. We had 5 actionable alerts. So far, nothing stopped out. 0%. On a typical week, 20% of the alerts do get stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step process we teach all of our traders. Along with the logic alerts, which come out around the clock, we still have our original alert service, the concierge trade alerts, and those came out last night a little later than normal, 7:25 p.m. Eastern. The markets open at 6. There's 2 numbers for each market, and so you simply draw a line in the sand, and you'll see that when we go to the charts. Draw a line in the sand at 44.71, draw a line in the sand at 44.48. Price starts trending up towards 44.71. That's bullish, and our strategy will look for opportunities to buy the market or be long. And that's when you yourself use logic and everything you learn in the live training room each day to yourself find opportunities to be long the market. Price starts trending down towards 44.48. That's bearish, which means our strategy will look for opportunities to be short the market. And that's where you'll use logic and everything you learn in the live training room to find opportunities to sell the market or be short. So if you want to grab a screenshot, you can. We'll go to the charts. Okay. Start out with a daily chart of the S&P. And we'll refresh it just to make sure we got an accurate chart. There we go. Okay. This last leg down that we had, actually we had a leg and a retracement, a leg, a retracement, and then this leg put in a higher low, and right at blue and climbing, which we expect to be support, and it was, and that support took us up through the BBC. Now over here we struggled 3 days to get through that 62% reverse fib. We are now through the reverse fib. We're now lined up right with these 2 previous swing highs, which happened at the bearish cross. Whenever price whenever we have a bearish cross that leads to an extended move like this, or a bullish cross that leads to an extended move, when price first revisits that area, which is what happened right here, we expect that area to be good resistance. And it was, almost to the tick. It sent us down for this leg. And so now we're approaching, might as well just stretch this on over. We have hit that area that was strong enough resistance to send us into this leg to the downside where we put in a lower low. And price is looking like it wants to punch through this area. If we get through this little rectangle I just drew and then hold it on a pullback, then we have a big, nice window of opportunity that could potentially take us up to the all-time historic intraday high and the all-time historic closing high. So resistance overhead is currently high of the session, and support below from a daily perspective would be the low of the session. It's just pretty simple, and it'll probably take another 2 days and we may have a bullish cross on our hands. This bearish cross, this is the most time price spent below the BBC this entire year. You're looking at it right here. And so this is quite the turnaround. We're right back up. Now if price fails here, then the market is probably headed to some very low prices. But everything looks bullish at this point. We've got 1, 2, 3, 4 green candles in a row. Okay, it's possible that we struggle here a bit, get into some choppy type trade, but whether we break above and hold the pullback or fail are both huge. Okay, and since we've taken out that 62% reverse fib, probably tomorrow I'll take off the last leg down and I'll be drawing fibs for the last leg up. Okay. All right, so that's the daily look at the chart. As you can see, we're high of the session. Okay, the CTA numbers that you just looked at. Long side was 44.71 and the short side was 44.48. So we triggered here. We actually got below 44.48. We dropped a 1.5, and we got back above the trigger. This time we dropped to 41.75. We'll call it 42. That's 6 points, and price got back above the trigger. It dropped again, back above the trigger, dropped again. This time we dropped to 44.41. That's 7 points, $50 a point, $350 per contract traded, and we got back above the trigger again. The only issue is this time, as we triggered, we were facing blue and sideways. That's potential support. Now, typically you would resist taking that trade at least until you get below blue and sideways. Price did make it to the target. These are this week's weekly trading zones. Normally I don't put this week's zones on the chart until Tuesday, but that's another whole long story I won't bother you with. So price did finally make it to the target. So we had, multiple triggers on the short side. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. And so price gets above this weekly zone, takes us up to 44.71. We put in a swing high at 74.50, so that's 3.5 points. And then we get back below the trigger in that same candle, trigger again, and we put in a high at 44.74.75. Is that right? Yep, 74.75. So that would be 3 3/4 points, and we're sitting right on top of the trigger. And of course the trade to target On a long is always the weekly trading zone above. On a short, the trade to target is always the weekly trading zone below. And so the zone is 44.39/44.40, and this swing low was 44.41. So here we missed it by a point, and here we hit it, but again, you had that little splash of blue there. And so here we sit. Price pulling back, looks like it wants to dip below the trigger. You've got blue and climbing at your back, and so if price comes down to the step line or blue and climbing or even the BBC, then a long trigger on the upside. This next one might take us all the way to the zone at 77/78. On the Dow, triggered on the short side but not on the long side. This is a lot of sideways consolidation. So the trigger was 34.980. The low was basically 34.970. It's like 12 points, $5 a point, $60 per contract traded. And then we triggered again. And from 34.980, we dropped to 34.906. So basically 70 points, $5 a point, $350 per contract traded. On the Russell, yeah, it looks like I forgot to put the, see, today is the 18th, 17th. So this would have been the, that would be the opening candle last night. Right there. So we may open it up a little bit. So we triggered on the short side, 22.60, and we put in a low at 22.57. We'll call it, we'll be conservative and round it up to 22.58. So that's 2 points. And then we triggered again, and this time we made it all the way to the target, 22.60 to 22.53 with 7 points. We just had a bullish cross. Price trying to work its way up to the weekly zone overhead at 22.74/75. As you can see, as price dropped to the weekly trading zone, it held. When price drops to a weekly zone, we expect it to be good resistance or good support. When price rallies up to a zone, we expect it to be good resistance until proven otherwise. Only 3 things happen at a weekly trading zone. The most likely thing is what you see right here, a consolidation. We published the zone since December 14th of 2009, and price has behaved pretty much the same since we first started publishing. You can think of the weekly trading zones as fixed support and resistance for the entire week. Once the zones are published on Monday morning, they are carved in stone for the entire week. They don't change, we don't massage them, we don't manipulate them. Once they're posted, that's it. And so, the zone held. On to the NQ. On the NQ, we also had two-sided action. The number is actually 15.089. Double check that to make sure. Yeah, 15.089. And it won't let me change it here. because sometimes that doesn't load. So 15,089 down to 76, 77. It's 12 points, $20 a point, $240 per contract traded. And then price got below the trigger here, but didn't really go back above the trigger. And we put in a low at 15.0, we'll call it, it's 038.75, we'll call it 15.040. So that's 49 points at $20 a point, almost $1,000 per contract traded. Then we get back above the trigger, trigger again, back above the trigger, trigger again. But again, this time you'd be going short into blue and climbing, and that's not advisable. Even though it handed over a nice trade. The guidelines say if you're going to short at a CTA, you want to have red and falling at your back. You don't want to short into the face of blue and climbing, which is potential support. And that blue and climbing took us all the way up to 15,143. The trade to target overhead was 78. So that's about 35 points, $20 a point, $700 per contract traded. We sliced through this weekly trading zone. Typically what happens when we have a slice, I said there's only three things that happen at a zone. The most likely is consolidation, the second most likely is rejection, the third and least likely is the slice. But when the slice runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. And so be prepared for a potential pullback here to this zone. And if we find good support at the zone, then a potential run to the upside. So that's the NQ. Crude oil. Never triggered on the short side. A couple triggers on the long side. The long side was 82.90. Made it up to 83.10. That's $200 per contract traded. Then we got back below, and on this one, red and falling is below us. You don't have blue and climbing overhead, and so this one took us up to 83.18. So that would be $280 per contract traded. Back below the trigger. There's another trigger. Took us up $100 per contract. And then two more triggers. $80 per contract traded. And here we sit consolidating at a weekly trading zone. And it looks like that short side could just come into play today. The number is actually 81, not 81.01. On gold, no trigger on the long side, but we did trigger on the short side. Multiple times. 1764, the first drop took us down to 1762, $200 per contract traded. Then back above and another trigger, which took us down to 62.60. Back above the trigger, down we go again. This time we made it to 1761. That's $300 per contract traded. Then back above the trigger, down we go again. 1760.3. We'll round it up to 61 to be conservative. It's $300 per contract traded. Now we've got blue and climbing in the picture, and so we would not want to short that. The long trigger overhead, 1774, that has not been touched as of yet. And again, these are the current weekly trading zones. Last on the list, silver. Silver's been coiling and consolidating for a very long time. No trigger on the long side, but on the short side from 23.28 we dropped to 23.20. It's an 8-cent move, 2 pennies, $100. Back above the trigger, dropped again, 23.23, 5 pennies, back above the trigger, and back above the trigger. Finally made it to the target, overshot the target. The target was the zone below, 23.12/13. That's the story on silver, which brings us all the way back to the daily chart. Price trying to fight through this area. Keep in mind, this was a green candle all the way up to that previous bearish cross, and then it collapsed. And in the same day that it got rejected up here, it closed back below the BBC. Now, is there the potential for that to happen here? There is, but I must say the market looks very bullish. Over here we had 1, 2, 3 consecutive green days, and we were working on our 4th green day when this happened. And so 1, 2, 3, here we sit. This is a really critical area. If we clear this area and hold it on a pullback, then look for a run at the all-time highs. If we fail here, then a move back to the BBC. We would expect the BBC to be support and still give us another leg to the upside. If price continues to move higher, we'll get a bullish cross. And this is what an uptrend looks like. This is what a downtrend looks like. You see, we had a low, we had a lower low, we had a higher low. And here's where we are. Okay. If you haven't grabbed your passport yet, you can grab it at eminifuturestrading.com. 9 out of 10 new traders outside of our walls ultimately fail simply because they don't have a teacher. And that's what Michael does every morning along with Valerie. They teach you how to trade. They teach you our strategy, how to read our indicators. When you become a passport holder, you have access to the live training room daily for life, unlimited one-on-one mentoring. You learn our proprietary methodology. You own the indicators for life. You get the Logic 247 alerts around the clock, the concierge trade alerts, access to the Thursday night members only workshops. Everything we do, everything we've ever done, and the stuff we'll do in the future. You'll never pay another penny. The passport is for life. And again, you get it at eminifuturestrading.com. And with that, we'll go to our good word for the day. Friday we talked about there are no menial jobs in God's kingdom. Today we'll talk about using the smile strategy. Job. You wouldn't think you'd find anything about smiling in the book of Job, but Job 29:24 says, "When they were discouraged, I smiled at them. My look of approval was precious to them." The pastor tells of being in a church for 12 years. He had a custom during Sunday morning service of calling the children forward just before his sermon so that they could go to a children's church, especially for them. The children would march past the pulpit, and he would make it a point to smile at each of them. In return, he received smiles. It was one of the high points of the service for me, he recalled. But one day he apparently missed smiling at a child. A curly-headed 4-year-old ran out of the procession and threw herself into the arms of her mother, sobbing as if her heart was broken. After the service, he went to find out what happened. The mother explained to him that her child had said, "I smiled at God, but he didn't smile back at me." The pastor reflected, "To that child, I stood for God. I had failed with my smile, and the world went dark." As you go through this day, commit yourself to using the smile strategy. Now, you might say, "I've got more troubles than Job, so I've got nothing to smile about." Job experienced more troubles in a year than most of us will experience in a lifetime. But though he was down, he lifted others. Though he was in despair, he encouraged others. How did he do it? In Job 29:23, "They longed for me to speak, as people long for rain. When they were discouraged, I smiled at them. My look of approval was precious to them." So get out there and smile at somebody today. It might just make their day. And that is our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.